Unemployment falls to 3.5%, but the best might be over for the labour market. Australians face 3 winters of low energy supply, and global airport rankings are out, with Singapore taking the top spot and Melbourne Airport the best in Australia. It's Friday, the 17th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning. Happy St. Patrick's Day. I come from a family of a Chris, a Mary Ellen, a Sean, a Brendan and a Patrick. We always celebrated the 17th of March at home.
It's today St. Patrick's Day.
Oh, Michael Thompson.
I'm sorry.
Mickey T.
I thought it was 3 days ago, Sean, and I'm sorry. I'm not respecting your culture. Happy St. Pat's Day, Sean. To celebrate, we've got a fantastic interview that's completely unrelated to that, but it is a great chat. I reckon this is up there as one of my favourites that you have done in a very long time. Eric Peck, the CEO of Swoop Aero.
Yes. So Eric used to be an Air Force pilot, and he and his co-founder have created kind of like the ultimate drone service, mostly used to supply medicines and medical supplies to far-flung regions of the world. They have a big business in Africa, a growing business in Australia. They come out of Melbourne, and it's just this incredible story of how they've used their expertise to do really genuinely important work in the health system by flying drones and delivering medicines. Fascinating.
Yeah, it is. It feels like this is kind of what drone technology should be used for. It feels like you see a lot of people kind of flying them around, flying around beaches and parks and things, and they get really annoying, that drone, the noise. But this is kind of fantastic. This is really exciting stuff, and I love the chat, Sean, so it's definitely worth sticking around for. But the main story this morning, the unemployment rate has fallen back down to 3.5% after more than 64,000 people found work in February.
It was the bounce back that many economists expected after 2 pretty weak months. Now, the jump in February reflected a 74,900 increase in full-time workers. That is massive, partially offset by a 10,300 fall in part-time employment. The number of people unemployed fell by 16,500, and the underemployment rate fell to a very low 5.8%. Now, the participation rate, people working, wanting to work, taking part in the workforce, that rose to 66.6%. That's just under record levels. The previous 2 months were affected by statistical quirks, according to the Bureau of Statistics. People basically were waiting to start a new job was the main reason. Even so, it was a better than expected result in February. The labour market, Michael, is strong, though I must say, based on some leading indicators, it may have peaked.
So, Sean, what does this mean then for interest rates?
Well, Reserve Bank Governor Philip Lowe last week said jobs data is a key determinant of whether the board will deliver an 11th consecutive rate rise at its board meeting in 2.5 weeks' time. But the world has changed plenty in the past week. We had the collapse of Silicon Valley Bank in the US and the massive sell-down over the past 36 hours of Credit Suisse, one of Europe's biggest lenders. That's triggered a sell-off in bank stocks and much more uncertainty around the economy. And the Reserve Bank and other central banks won't want to be encouraging financial instability through higher interest rates. There's plenty of market economists out there who think the Reserve Bank won't lift interest rates in April next month, and a few more who think they shouldn't.
Yeah, it's been a massive, say, 24, 36 hours, Sean. How did local markets respond?
Well, the S&P ASX 200 fell another 1.5% yesterday to 6,966 points. That's on the back of this fear of financial contagion coming out of Europe. We'll talk about that in a moment. The market is now trading close to its lows of early January. Oil and energy stocks led the way lower as commodity prices fell. Many financials also tumbled. BHP was down 5% and Rio Tinto was off 4%. Fortescue Metals fell 3%. ANZ and Westpac led the big banks lower, though interestingly Commonwealth Bank outperformed the market. Woodside Energy was off more than 5%. South32 and Santos both tumbled 4%. More than 4%. These are really big name companies falling a long way in one session. The stocks that did best were the defensives, the ones that just look good in tough times. Newcrest Mining rose on the back of a high gold price, for example. Coles Group did well. CSL, the healthcare outfit, did well. They were both up 1%. Telstra also rose. Plenty going on in the market.
Absolutely. But as you said before, Sean, really all the talk is about what's going on in international markets.
Yes, it's about the growing disaster at Credit Suisse, which has hit financial markets. It began when the chair of the Saudi National Bank, which bought a 10% stake in Credit Suisse last year, ruled out providing the Swiss lender with any more financial assistance. That triggered a 30% fall in the bank's share price. It ended up closing the day down about 23%. That is massive. Swiss regulators moved quickly, saying Credit Suisse can access liquidity from the central bank if needed. Later yesterday, Credit Suisse came out and said it would borrow up to 54 billion US dollars from the Swiss central bank. Now, the Swiss bank has been hit by a series of scandals in recent years, including the biggest trading loss in its 167-year history on the implosion of Archegos Capital and the damaging closure of 10 billion US dollars of investment funds linked to the collapsed finance firm Greensill. It just seems to have made a bunch of really poor decisions. The fear is that there'll be a contagion as a result of what's happened at Credit Suisse, because many other banks, particularly European banks, are linked to Credit Suisse and would have financial relationships with it. And that really triggered panic and sent share prices lower yesterday. Before we leave international markets, I just need to mention oil prices. The slide continues. Brent crude futures fell 7% to below $75 US dollars a barrel. Now, that's the lowest since December 2021. They're kind of getting back to more normal, whatever that is, more normal levels. Of course, once again, this is all about fears of financial contagion in the banking system.
It is just such a big, big story, isn't it, Sean? We'll be back in a moment with the rest of the day's business news. Sean, there's more on the energy crisis that is looming in the Australian market. The regulator has warned some Queensland exporters may need to divert gas to domestic customers this winter.
The Australian energy market operator said the action might be needed to head off shortfalls in southern states. And within 3 years, LNG exporters may have to break into long-term sales contracts with Asian customers to prevent local supplies from running short, particularly given the future of the proposed Port Kembla LNG import terminal is unclear. Now, in short, the East Coast faces gas shortages every winter until 2026, according to the regulator. Investment is needed in gas development on the East Coast, but the regulator had a pointed warning about government regulation. Canberra's intervention into the market last year through price caps and ongoing price regulation has caused several projects to stall and raised uncertainties for new projects. So while energy prices probably aren't rising as much as they would have if the government didn't step in, longer term, it's causing some real problems.
Sean, BHP is facing the world's biggest class action lawsuit based in the UK after 500,000 new claimants were added in the past 3 months.
The action is over the 2015 Samarco dam disaster in Brazil, the country's worst ever environmental disaster in which a 110-metre high dam wall collapsed, sending 32 million cubic metres of sand and sludge downstream. It ended up killing 19 people, but it destroyed much in its path, a real environmental disaster. London lawyers say there are now 700,000 claimants, and the trial is set down for April next year. The action will try and hold BHP financially liable for damages. Now, BHP denies the claims in their entirety and, along with its joint venture partner in the project, Vale, has set up a large foundation to help victims. Still, a massive class action lawsuit against it.
Yeah, and just staying on class actions, Sean, more than 800 Australians over 65 have joined a class action challenging their exclusion from the National Disability Insurance Scheme.
Yeah, potentially taxpayers could, be out of pocket hundreds of millions of dollars if the case is successful, which would actually eclipse the cost of the federal government's robo-debt settlement and become the most expensive class action against the federal government on record. Still has a way to go, though. Mitri lawyers partner Rick Mitri, who's launched the class action, expects more than 1,000 people will ultimately sign on to the case. Proceedings are expected to be launched in about 3 months' time.
Sean, I think I need to lodge a complaint. At the moment, we have just had bad news story after bad news.
Surely the next one.
Yeah, okay. I've got my fingers crossed here, hoping for something a little bit lighter. Lender Latitude Financial, Sean.
Yes.
Says that a hacker appears to have stolen up to 103,000 copies of customers' identification, more than 97% of which are driver's licenses.
Yeah. No good news here. Now, Latitude said it was hit with a sophisticated and malicious cyber attack, leading to the theft of the IDs as well as 225,000 customer records. It said unusual activity had been detected on its systems in the last few days and is believed to have originated from a major vendor used by Latitude. The group is taking steps to contact affected customers and has spoken to law enforcement agencies. It's the latest in the growing list of cyber attacks locally. While Optus and Medibank got all the headlines late last year, most weeks on the ASX, a company comes out and releases an announcement about a cyber hack. For example, yesterday, Intellectual Property Services Group IPH said it had been attacked, sending its share price much, much lower. It's becoming a very regular occurrence.
Sean, how about this one? Former Treasury boss Ken Henry has come out swinging, saying the federal state tax system fails every test, including for economic growth and fairness to younger people. Wow, he has not missed, has he?
No, we all know he's going to love this story, don't we?
Oh, our Fear and Greed colleague Adam Lang, who is a lifelong campaigner for tax reform.
I don't think he just wants tax reform. He doesn't ever say, he wanted a flat tax, I think, but he's not overly sophisticated in the type of tax reform, just so long as there's tax reform. In fact, he and Ken Henry would really get on well.
Oh, you know what? This sounds like perfect fodder for the weekend edition. Mm-hmm. And actually, you know what? Even just as I say that, because our weekend edition is very competitive, but using tax reform to promote a weekend show really doesn't sound like it's going to drag many people through, does it?
No, probably not. Look, Dr. Henry, who of course was the architect of the major blueprint for tax reform a couple of decades ago, said Australia needs political leadership that does more than tinker at the edges. The Howard government's desirable tax mix switch from personal income taxes to less economically damaging and broad-based indirect taxes, basically the GST, had now been completely undone by an erosion of the GST base and income tax bracket creep. Now, Dr. Henry said living standards and real wages had suffered over the past 20 years and growth per person was 20% below the original intergenerational report's 2002 aim. Now, according to a report in the Financial Review, the government will ultimately need to raise an extra $50 billion a year to cover big spending pressures. But Dr. Henry reckons Treasurer Jim Chalmers has so far not outlined a credible medium-term fiscal strategy to balance the budget. He didn't hold back. Now, Jim Chalmers did come out afterwards and disagreed with Dr. Henry. No surprises there, but he certainly threw a fairly hard punch.
Yeah, he sure did. Wouldn't it be good to see a real Barney over tax reform or something?
In the ring.
Oh, you actually want to see real punches being thrown?
Yeah. Jim Chalmers versus Ken Henry.
Can you imagine that? An actual fight in the ring over tax reform.
That'd bring their crowds back to tax reform, wouldn't it?
Were the crowds ever with tax reform, Sean?
Well, no, that's true.
It would bring the crowds to tax reform for the first time. I think we can agree that's probably the goal here. Let's move on. The property market is tough at the moment with high interest rates hitting leveraged builders. While new home approvals have tumbled, now the country's largest builder, Lendlease, has warned that more builders will go broke.
Yes, Chief Executive Tony Lombardo, in an interview with the Financial Review, said more builders are feeling the pressure and will go under. He said smaller players have taken on fixed price work during the peak of the cycle, then inflation hit and material and labour has become more expensive. Lendlease itself is under fire from activist shareholder Tanara Capital, which released a note this week saying the company hasn't created shareholder value over a sustained period of time. The note points out that Lendlease's share price is lower than what it was 30 years ago. Now, its share price has certainly been volatile more recently, and it is trading at about 1/3 the level of mid-2018. But Lombardo yesterday said his strategy of delivering $8 billion in property completions by 2024 was on track and the right one to improve shareholder returns.
All right, turning to international news now, and the New Zealand economy shrank by 0.6% in the final quarter of last year, a greater contraction than expected.
Yes, market expectations were for it to go backwards, but not by that much. Basically, it suggests the recession started last year. Remember, the Reserve Bank of New Zealand has been aggressively lifting interest rates over the past year or so. Its benchmark rate is now 4.75%. Now, Australia's is 3.6%, so it's well in front of that. 9 of New Zealand's 16 industry categories reported a fall in activity, led by manufacturing, which was down nearly 2%. Another sector hit hard was tourism. New Zealand's really battled to regain tourist numbers back to pre-COVID levels.
Sean, North Korea test launched an intercontinental ballistic missile in a display of military might just hours before the leaders of South Korea and Japan were to meet at a Tokyo summit.
Yes, the launch, the North's first intercontinental ballistic missile test in a month and third weapons test this week, comes as South Korean and US troops continue joint military exercises that Pyongyang considers a rehearsal to invade, according to Associated Press. South Korea's military said the missile flew toward the Korean peninsula's eastern waters after being launched from Pyongyang before landing in the waters between the Korean peninsula and Japan. We speak so much about geopolitics and China's relationship with the rest of the world, we sometimes forget North Korea isn't the friendliest country around either.
Do you reckon North Korea has like a big calendar in their military HQ? And I picture it as kind of like being like an old school kind of calendar, and on it they've marked all the important dates for the year, like summit here. So
military exercises, yeah.
Exactly. And they just time it all in, just like how you might go, okay, Christmas is here, I'll make sure I do the grocery shopping 2 days before that. They've got kind of summit in Tokyo. Let's make sure we launch this missile on Thursday.
That is an unusual comparison, but yes, I think you're right.
It's just speculation, but I defy anyone to prove me wrong. Finally, Sean, Singapore's Changi Airport has taken back the title of world's best airport, dethroning Qatar, which has held the title for 2 years.
Yes, Doha's Hamad International Airport in Qatar has been bumped to number 2, followed by Tokyo's Haneda Airport, according to Skytrack's World Airport Awards 2023. They're the big ones in the land of airports, apparently. Seoul came in next, then the first European airport, Paris's Charles de Gaulle. No US airport managed to make the top 10, Michael. Surprise, surprise. Seattle was the best of the North Americans, coming in at 18, just one spot ahead of Melbourne, which was the best of the Australian airports. Some others of interest. London's Heathrow was 22nd, pretty good. Brisbane was 23rd. Hong Kong came in at number 33. Sydney came in at 49, and JFK in New York at 88.
I don't know what to make of that list. It's just a bit uninspiring, really, isn't it?
Don't you love going to airports? So, like, I think Singapore and Frankfurt is my all-time favourite airport. I don't even know why. I just probably when I went there it was just the right time.
You'd come straight from Oktoberfest. I'm pretty sure you could have gone anywhere and thought it was fantastic, Sean.
True.
Anyway, up next is the Fear and Greed Daily Interview, and today you're speaking with Eric Peck, CEO of Swoop Aero.
Yes, the next generation in drones being used to deliver medical supplies to far-flung places. A cracking interview.
Yeah, it's a great one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 17th of March, 2023. Make sure you're following the podcast. Join us online, as always, on LinkedIn, on Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.